In the previous class, we discussed about the concepts of contract costing. Today, we will discuss few illustrations on contract costing. So, the first illustration is here. So, the following was the expenditure on contract for rupees 6 lakh commenced in January 2023. So, the following information is given. First is materials rupees 1 lakh 20, wages rupees 1,64,400, plant it is 20,000, business charges 8,600, and cash received on account to 31st December 2023 it is 2,40,000, and out of which 80% is the work certified. The value of materials in hand on 31st December 2023 is rupees 10,000. So, what needs to be done is to prepare the contract account for 2023, showing the profit to be credited to years profit and loss account, and plant is it needs to be depreciated at 10%. So, this is the problem. These are the information given, and we need to prepare a contract account. So, we will see which items will be considered in the contract account and how. So, this is the contract account. On the left hand side, the materials are taken 1,20,000 and wages 1,64,400. These figures are given in the problem. Plant 20,000, business charges 8,600, and here the plant in hand it is given 20,000 in the question, and 10% is the depreciation rate. So, 10% if we deduct depreciation of 2,000, that is 10% of 20,000, then we will get 18,000, and materials in hand it is given it is 10,000, right. Work certified is 80%, and the value is 2,40,000. So, 2,40,000 into 100 by 80, that is rupees 3 lakh, right. Now, if I add the left hand side, the total is coming 18,000 plus 10,000 plus 3 lakhs. So, total is coming 3,28,000. So, this 3,28,000, if I calculate the balancing figure, that is my notional profit. This notional profit is coming 15,000 here, right, first. Now, for calculation of transfer to the profit and loss account, this notional profit I am bringing down here 15,000, and out of which 2/3, because 80% work is certified. So, 15,000 into 2 by 3 into 80 by 100, it comes to 8,000. So, 8,000 it is getting transferred to the profit and loss account, and the balance, the reserve, the 7,000, it is going to work in progress. The total this side if I make, then total is again coming 15,000. This side it is coming, total is coming at 15,000. Fine. So, this is my problem. Now, another illustration, the illustration 2. From the information given below relating to an unfinished contract, ascertain the profit on work certified. All figures are in rupees, right? All figures are in rupees. So, what are the information given? First is material sent to site, 86,000. Labor engaged on site, 65,000. Plant issued, 80,000. Direct expenses, 8,000. Establishment charges, 4,000. Materials returned to stores, 600. And this work certified is 1,90,000. Uncertified work 7,700. Materials in hand 2,000. Wages accrued 300. Cash received 1,61,500, and depreciation of plant is 7,000, right. So, what I have to do? I have to ascertain the profit on work certified. So, this I have to calculate from the information given. So, we can do it like this. We can open one contract account. So, material sent to site, it is given 86,000. So, you can see here material sent to site from here, this figure is coming here 86,000. Labor including outstanding, it is 65,300. So, labor is 65,000 here, right, plus outstanding wages, it is 300. So, total is 65,300. Plant issued 80,000, right, it is given here, plant issued here 80,000. Direct expenses 8,000, it is given. Establishment charges 4,000. Materials returned to stores, it is 600. Material returned to stores, it is 600. Materials in hand 2,000. Plant in hand is 80,000 minus 7,000. So, you can see here the depreciation is 7,000 and plant is 80,000. So, 80,000 minus 7,000 is 73,000. Work in progress certified, the work certified is 1,90,000 and work uncertified is 7,700. Now, if we add the right hand side, the total is coming at 2,73,300. So, this is my total, right. This is the total should be equal on both sides. So, this is my total here. If I calculate the balancing figure, it is coming to 13,000, which is the notional profit. So, this is the notional profit carried down 30,000. This 30,000 I am carrying over here, right. So, I am carrying over here, and out of that in the P&L account I am transferring 20,000, right. So, the rest balancing amount, it is 10,000, it is going to work in progress, right. I can calculate the work, profit and loss on certified work like this: 30,000 into 2 by 3, that is 20,000. So, this 20,000 is going to be transferred here, and rest of the amount which is uncertified, which is yet to be certified, that I am carrying as work in progress. So, this is another illustration for calculation of profit in case of a contract. Now, we are moving to the next illustration. So, illustration 3. The illustration is, it is saying that an expenditure of 1,92,000 has been incurred on a contract up to the end of 31st March 2023. The value of work done and certified is 2,10,000. The cost of work done but not yet certified is rupees 12,000. It is estimated that the contract will be completed by 30th June 2023 and an additional expenditure of rupees 18,000 will have to be incurred to complete the contract, right. The total estimated expenditure on the contract is to include a provision of 12.5% for contingency. So, it is expenditure of 18,000 will have to be incurred to complete the contract. So, total expenditure on contract is to include a provision of 12.5% for contingencies. The contract price is 2,80,000 and rupees 1,68,000 has been realized in cash up to 31st March 2023. Calculate the proportion of profit. Calculate the proportion of profit to be taken to profit and loss account of 31st March 2023 under different methods. So, we will discuss the methods through which the proportion of profit can be taken to the profit and loss account. So, this is the working note, right. The estimated profit is computed first as follows: total expenditure up to 31st March 2023 is 1,92,000. add additional expenditure, it is 18,000. So, the total is 2,10,000, right. Add provision for contingencies, it is given in the question. You see, there is a provision for contingency of 12.5%. So, add provisions for contingencies 12.5% of total expenditure, right. So, it is coming to 30,000 if we calculate, right. It is coming to 30,000. Therefore, the total estimated expenditure is 2,10,000 plus 30,000, 2,40,000. The contract price is 2,80,000. The contract price is 2,80,000. Therefore, estimated total profit is 2,80,000 minus 2,40,000. So, 40,000, right. Now, for computation of notional profit, value of work certified is 2,10,000, right. Less cost of work certified is 1,80,000. So, your notional profit is 40,000. Fine. So, this is the working note. Now, on the basis of this, we can calculate the amount which can be transferred to the profit and loss account. The profit to be taken to profit and loss account as on 31st March 2023 may be computed by anyone the following method. The first method is estimated total profit into value of work certified divided by contract price. So, 40,000 into 2,10,000 divided by 2,80,000 is equal to 30,000, right. So, 40,000 into 2,10,000 divided by 2,80,000 is equal to 30,000. So, this is one way of calculating the profit to be taken to the profit and loss account, right. Will be now second method is estimated total profit into the value of work certified divided by the contract price into cash received divided by work certified. We already calculated the estimated total profit. You can see here the estimated total profit is 40,000. So, we transferred 40,000 here into value of work certified 2,10,000, right. The value of work certified 2,10,000. 2,10,000 divided by the contract price is 2,80,000. Cash received in the question is 1,68,000 divided by work certified is 2,10,000. So, if I calculate, I will get this value rupees 24,000, which is to be transferred to the P&L. In the third method, we can calculate using this formula estimated total profit into cost of work to date divided by estimated total cost. So, we can put the values in this formula. So, estimated total profit is 40,000 into cost of work to date is 1,92,000 divided by estimated total cost 2,40,000. You can see here we calculated here estimated total expenditure is 2,40,000. So, 2,40,000 if I calculate, I will get this value rupees 32,000 which can be transferred to the profit and loss account, right. So, this was the third method. Now, we will go to the fourth method. Fourth method is estimated total profit into cost of work to date divided by estimated total cost into cash received by work certified, right. We can put the values into this formula. So, estimated total profit is 40,000 into cost of work to date 1,92,000. You can see here we calculated here 1,92,000, right. 1,92,000 and estimated total cost 2,40,000, cash received 1,68,000 divided by work certified 2,10,000. So, it is if I calculate, then it is 25,600, right. There is a fifth method under which it can be calculated by using this formula. Profit is equal to notional profit into work certified divided by contract price. So, notional profit is 30,000 divided by work certified 2,10,000 divided by contract price 2,80,000. So, if I calculate, I will get this value rupees 22,500. There is a sixth method for calculation of profit, that is 2/3 into notional profit, 2/3 into notional profit into cash received divided by work certified. So, 2/3 into notional profit is 30,000. You can see we calculated notional profit is 30,000 into 1 lakh, cash received is 1,68,000, it is given, divided by work certified 2,10,000 is equal to rupees 16,000. So, these are the 6 methods under which using which the profit to be transferred to the profit and loss account may be calculated. Right. So, this was illustration 3. Now, we will discuss the illustration 4. So, in illustration 4, a company undertook contract for construction of large building complex. The construction work commenced on 1st April 2023 and the following data are available for the year ending 31st of March 2024. So, this is rupees in thousands, right, rupees in thousands. Contract price is 35,000. Work certified 20,000. Progress payment received 15,000. Material issued to site 7,500. Planning and estimation 1,000. Direct wages paid 4,000. Materials returned from site 250. Plant hire charges 1,750. Wages related costs 500. Site office cost 678. Head office expenses apportioned 375. Site expenses incurred 902. Work not certified 149. The contractors own a plant which originally costs 20 lakhs, has been continuously in use in this contract throughout the year. The residual value of, this original cost is 20 lakh, right. The residual value of the plant after 5 years of life is expected to be rupees 5 lakhs. Straight line method of depreciation in use. As on 31st March 2024, the direct wages due and payable amounted to rupees 2,70,000 and the material at site were estimated at rupees 2 lakh. Prepare the contract account for the year ended 31st March 2024. Right. So, this is the problem. So, we need to prepare a contract account. We can prepare the contract account like this. Two materials 7,500, right. These are all rupees in thousands. Direct wages 4,000 plus outstanding 270, 4,270. Wages related cost 500. Site expenses 902. Plant hire charges 1750. Planning and estimating costs 1,000. Site office costs 678, head office expenses apportioned 375. Depreciation we can calculate, 20 lakh was the original cost and 5 lakh is the residual value. So, it is 15 lakh and straight line method divided by 5 years. So, per year it is 300, right. On the right hand side, the material returned is 250, materials at site is 200, work certified is 20,000 and work uncertified is 149. So 20,149. If we add this, then it will be the right hand side, it will be 20,599. So this will be my total, right? And this is my total. So my notional profit, the balancing figure should be 3324, right? This 3324 I am transferring here on this side. So out of this notional profit, in the profit and loss, for the amount which will go to the profit and loss, I am using this formula: 2/3 into 3324, right, into 15,000 into 20,000. So it is 1662, right? So 1662 is transferring to profit and loss account. So rest once balance 1662 is will remain in the work in progress account. And if I add the total, so this side it will be total, and this side it will be total. So it will be 3324. So this was illustration 4. Fine. Okay. We will look into another illustration, illustration 5, right? The illustration 5 is showing Surya Construction Limited with a paid up share capital of 50 lakhs. 50 lakhs undertook a contract to construct MIG apartments. The work commenced on the contract on 1st April 2023. The contract price was 60 lakh, right? Cash received on account of contract up to 31st March 2024 was rupees 18 lakhs. Fine. Rupees 18 lakhs being 90% of the work certified. Okay. Work completed but not certified was estimated at rupees 1 lakh. As on 31st March 2024, material at site was estimated at rupees 30,000. Machinery at site costing rupees 2 lakh was returned to stores, and wages outstanding was rupees 5,000. Plant and machinery at site is to be depreciated up to 5%. The following were the ledger balances as on 31st March 2024. So land and building 23 lakh, plant and machinery 60% at site, it is 25 lakh, furniture 60,000, material 14 lakh, fuel and power 1,25,000, site expenses 5,000, office expenses 12,000, rates and taxes 15,000, cash at bank 1,33,000, and wages 2,50,000. So these are our figures. Using this, we can calculate the we can construct the contract account for the year ended 31st March 2023, right? 2024, sorry, so 24. It will be 2024. So materials is 14 lakh, right? To wages, it is 2 lakh 50 plus 5,000, 2 lakh 55,000. Plant and machinery at site 60%, it is 15 lakh. Fuel and power 1,25,000. Site expenses 5,000. Office expenses 12,000. Rates and taxes 15,000. This side the material returned is 2 lakh minus 5% of 2 lakh, so 1,90,000. Material at site it is 30,000. Plant and machinery it is 13 lakh minus 5% of 13 lakh, that is 12,35,000. Work in progress account, work certified will be 20 lakh and uncertified 1 lakh, so total 21 lakh. If we make the total is coming at 35 lakh 55,000. So this is the total. Now if I calculate the balancing figure, it will give me the notional profit, that is 2,43,000. This 2,43,000 I am transferring here, right, out of which this 72,900 is going to profit and loss account, and the balance 1,70,100 will go to the work in progress account. So this is my total. This is my total, right? So this is how I can construct the contract account for the given values. Thank you.